Hi gentlemen, good morning. Kunal, let me begin by asking you, it doesn't look like it was a good Friday and it doesn't look like it's going to be a good start to the week.
Good morning. Yeah, so I think the last couple of days we saw some extreme selling pressure which has come back into the global markets, and that's hurt the sentiments for our markets as well. The critical part about the charts for index is on two front. One is that we've managed to break below the 25,000 mark. This of course is was very strong support which we were holding on for the last two and a half odd weeks. So which means that we could now be looking at the indices shifting the base or the range on the downside. And the second, the most important part is we've managed to close below the 20-day moving average. In the last 2-3 attempts where the index has managed to close below the 20 DMA, we've gone down and we've managed to retest the 50 DMA at least before the index finds some bit of the first leg of support. That at current levels is at 24,500, which means that what we should now be looking out for is 24,500 as a fresh base or a support and 25,050 as a fresh leg of resistance.
All right, Nooresh, hi, morning. Let's get in your take as to what this week is spelling out for the markets. Will the next week of September be as rocky as the first?
So I hope it is not rocky as much, but it would be more consolidatory in nature. And we've taken the dip also from the top where we were not sustaining in terms of the breadth as well. Now 24,500, 600 is the band which should act as a support. On the upside, 25,100. So this could be a 400 to 600 pointer range going forward. And we've also taken a dip across the other indices as well. So time for a pause and a consolidation mode to continue in the markets.
Pause and consolidation to continue in the markets. But Kunal, the bulk of the weakness on Friday actually came from the banking index. SBI was under pressure, ICICI Bank did not participate, etc. Is that continue? Will that continue to be the nature of the market, that banks would be the weakest link?
Yeah, looks like, and within the banks also, I think Nisha, it was PSU banking index which was one of the top losers. I think it was down some 3.5% on Friday's closing, and that itself is an indication of the weakness within the banking index. Now the concern for many of these PSU banking names, the likes of Bank of Baroda, PNB, SP, etc., that some of them are very close towards breaking their 200-day moving averages, and some of them have already trading with a margin of I think 5% below their respective 200 DMAs. And that's not a comfortable sign, because when you're looking at the index trying to find support at lower levels or the selling getting arrested at lower levels, if you see the internals getting weaker for stocks, that's generally a sign that maybe the supports over the near term for the weaker sector may not hold on. So yeah, I think the concern for the banking index as such is the underperformance and the severe underperformance which has come back into the PSU banking index.
If you like this video, then like, share and subscribe to ET Now.